Hello everyone, welcome to the Ichimoku.co daily market review for the trading day ending Thursday, June 26th. Firstly to the S&P 500, and here we've seen a continuation of the trend to the downside, a lower high, lower low, but a candle once again where the sellers lost commitment throughout the trading day, as evidenced by this very long shadow on the chart. The buyers have taken control by the close of trading, even though we have a small black body candle, and it does suggest that there is potential for the change, for the trend to change to the upside. Once again, price rejection from at or just below the Tenkan-sen indicator, and that area is going to be a very important area of support moving forward around the 1949 area. Now this is in line with the market being bullish in all three time frames, trading above the cloud, the Kijun-sen and the Tenkan-sen, supported by the Chikas band, so suggesting that the next move here may be to the upside, and we may see a test to the major high around the 1968 level. Just looking quickly at the Fibonacci retracement for the second consecutive trading day, we've seen the market test to or just below the 50% level, being strongly rejected from there, and this suggests that as the market trades each time down to this level, we are seeing them lose commitment and suggesting a very real possibility of a change of trend back to the upside, so looking for confirmation with a higher high and a higher low. Next, moving to gold futures, and here more indecisiveness in this market following this very strongly bullish candle. The trend had changed for the previous day's trading. Today's trading, the second last candle, is an insight day in bar chart terms, suggesting that the downtrend that the market established previously is not very strong. Once again, for the second consecutive trading day, and from the recent past as well, the market has been rejected from the 1309 level, with the sellers strongly losing commitment down below there, even though the trend is technically still down, a day where the buyers close with control of the market, suggesting strong possibility of a change of trend. And as this current candle is developing, it's certainly looking that way, with the market establishing a higher high and a higher low. Now potentially some strong resistance around the 1325 level around these swing highs, and then certainly up around the 1329 level, so any bullish momentum may be halted at higher levels up to the Ichimoku cloud, roughly about the 1330 area. Moving next to light sweet crude oil, and here we've seen the market testing down below the 105.31 level, once again finding support there, and in the recent past it has been a major area of support for this market. The only problem here, however, is that we have seen the market in terms of net momentum shift to the sellers, establishing a lower high, lower low, and a fairly large black body candle, and suggesting that any upside momentum that the market may have found with the previous day's trading has evaporated, and the sellers taking control, once again very weak control however, and suggesting that there could be a breakout to the downside with the close down below the Tenkan-sen as well, so perhaps something of a change of sentiment in that short-term time frame. So we should be watching the area below 105.31 very carefully, but the price rejection from down below there, and the inability of the market to close down below there in a bearish manner, does suggest that we may see more congestion. So we are seeing something of a rectangle pattern, something of a largish flag. It's a little bit too large to be a flag pattern. They tend to be smaller. Here we have the for the size of this uptrend that the market's been in, it is a little bit too large. So it's more of a rectangle pattern, even though these levels here at the high and the low aren't strictly horizontal. But what we're looking for here is a breakout in either direction. So a breakout to the downside, what we'd want to see is the market closing down below the Kijun-sen, which is trading just below there as well, to give us some sort of confirmation. That also corresponds with the swing highs around this previous major peak in the recent past. A bullish breakout up above here would be significant, and a close, what we're going to see is a bullish close to give us some confirmation, and that would be in line with the market trading above the Ichimoku cloud and the Kijun-sen indicator, giving us that very bullish market in the longer term and medium term time frames. Moving to wheat, and here we've seen the market gap up on an indecisive candle, so technically a change of trend today, a candle with a higher high and a higher low, but an indecisive, almost doji type candle, suggesting a lot of indecision in this market. Once again finding resistance at the 590 level, has been strong resistance in the recent past, so we're looking for sellers to come into this market. Interestingly though, we have managed to close just above the Tenkan-sen, and it's been quite some time since we've seen the market even close above there and trade anywhere and close anywhere near the 10%. So there may have been something of a change of sentiment in this market back to the buyers in that short-term time frame. So we will be looking for the market to potentially breach this 590 area, and we're looking for a strong bullish activity above there. The problem here, however, is that we do have the round number 600 close by, so we could see some strong price rejection coming in from around that area. But this market is still negative in all three time frames, but looking a little overextended in the distance away from the cloud. Moving next to the 30-year bonds, and here we've seen some follow through today. This second last candle is the current candle on the chart. It has finished trading. Continuation of the trend to the upside, so we were looking for follow through with this candle. It is a bullish candle, but only a moderately bullish candle. The size of the white body is probably good in terms of the buyers building upside momentum, so that's a positive for the buyers there. They've extended the size of the body, so a continuation to build net momentum. The only problem here was the rejection from above the 136.31 level and the failure to close above there, and we see this shadow, and it means that the buyers had the opportunity to close with strong control, and if we saw that, we could have quickly seen the market testing to 137.25. So we've seen rejection from there. Now, by the same token, the buyers have still closed with control, and that's important, even though it's a moderate form of control. So there is an opportunity here for the buyers now, as this current candle is developing, to trade to higher levels, and we have seen the market testing just above the high and be rejected from there in a minor way. So still potentially good trading activity up to this 137.25 level, and that would be in line with the market being bullish in all three time frames. If we can maintain the close up around these levels at the close of the of this current candle, we could see the ticker span above the corresponding price action. But as we finished for that today's trading, that ticker span was within the corresponding price action, so still raising some doubt about whether the market had the upside momentum to actually continue trading further and trade up to the 137.25 level. So a lot depends on how the market reacts around this high, and already we're starting to see some rejection.